Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day. So in today's video, we're going to be doing part 3 to the Overrated, Underrated series that I started a couple of weeks back. The audience really seemed to enjoy the last one that I did and recommended that I start doing this on a more recurring basis. By the way, if you haven't checked out part 1 and part 2, I'll leave links down in the description. I'd highly recommend you check them out. We covered a ton of really interesting stocks and other topics. So in today's video, well, I did another Instagram poll and I asked you all to submit different stocks and other topics that you want me to include in the video. And as always, there were hundreds of applicants, or not applicants, but answers and submissions for today's video. I brought it down to around 20 or 30, I think. I'm going to do as many as possible to make this video in the 15-minute range, and I really hope you enjoy it. If you do, smash the like button and let's get right into the video. And just in case you want to submit a topic for the next one, part 4, make sure to follow me on Instagram. About bi-weekly, we're going to start doing this, and I'd also recommend that you follow me on TikTok. I started posting there about 5 times a week, some quick little TikToks about various different financial topics. So yeah, if you also missed part 1 and 2 of this video series, my girlfriend's going to be ringing through the different topics, and then I'm going to just give my quick thoughts and opinion on whether or not I think it's overrated or underrated.
Collecting rare wines.
Okay, starting off with something completely off topic from the channel. Collecting rare wines, I'm going to say is probably underrated, at least for me and for the audience on my channel, I'm assuming. So right now, I'm not collecting any rare wines. However, it is something that I think would be really interesting later on down the road. There are a couple different investment opportunities and avenues I would like to start investing in, but not right now as I'm building up my net worth and my nest egg. So right now, I pretty much just invest in different stocks, ETFs, real estate, and then a small portion in cryptocurrencies. But yeah, later on, I would like to start investing in other things like fine art, as well as some exotic supercars. That's something that I think would be really interesting. Cars that actually are in the realm of a certain status that they actually retain their value and or even gain value over time. And maybe rare wines would fall into that category. We'll see later on down the road.
And the next one's TikTok.
Okay, TikTok I think is massively underrated for content creators that want more organic reach. If you've been a content creator for a while and you're on Instagram as well as say YouTube, well, YouTube and Instagram's algorithms can be quite difficult to grow, and they're really sporadic. It's difficult if you're not paying to get organic growth. However, on TikTok, I really just started about a week ago. I know I'm super late to the game, and I was kind of avoiding it because to me, TikTok was kind of just all like dancers and stuff like that. But actually, there's also another side to it. There's finance topics as well as a bunch of other really interesting topics on that platform. And yeah, just from an organic reach perspective, for such a small account that I have right now, I think I just reached 300 subscribers. On average, I'm getting above 500 views per video. So just, yeah, from that organic reach perspective, I think it is underrated to grow quicker than on other platforms.
How about stocks?
Stocks just
stocks.
Okay, kind of difficult for me to give a blanket statement about stocks in general because obviously every single one is going to be completely different. You're investing in a completely different company. As a whole, I would say investing in stocks is probably properly rated to slightly underrated from a total society perspective because not everyone is investing, and you should be investing regardless of your age and where you are in life. So yeah, I'm going to say it's probably properly rated as a blanket statement for stocks in general, but obviously do your research on every single position. And if you want to learn more about stocks, just watch the videos on my channel.
HighTide.
Okay, HighTide, ticker symbol HITI. This is a stock that actually quite a few viewers had requested over the past couple of weeks and months, but I never ended up featuring it on the channel. Now, I just pulled it up on Yahoo Finance because it's, like I said, not a company I'm super familiar with, but just from a first overview here, I'm seeing the company, I mean, the stock is down quite a bit since it first pumped up a couple months back, down probably, what is that, like 50% or so. Now, this is a company that operates in the cannabis industry, and if you've been following my channel, well, you know that I'm very bullish on the growth of the cannabis industry in general, especially with other companies like TruLeaf Cannabis. HighTide, however, isn't a company that's manufacturing cannabis flower and other consumable products like that, they are actually retail outlets. So they have multiple different retail outlets and they sell cannabis. So yes, it does still operate in the cannabis industry, but sort of a different facet of it. At a share price of 60 cents, obviously this is a penny stock. Do expect a lot of volatility like any other penny stock. However, yeah, at this price point right now, we're seeing, what is it, price to sales ratio of about 3.5, so really not that bad. Forward price to earnings of 30, meaning they're actually going to most likely come into profitability this year. And from an actual top line growth perspective, I mean, really nice growth year over year over the past 3 years, and even quarter over quarter, I think, if I take a look here. Yeah, quarter over quarter as well. They're growing like crazy. So yeah, I would say this stock is probably underrated and at this price point could be a nice opportunity for longer term growth. But because it is a penny stock, make sure to only allocate a portion of your portfolio that you're willing to somewhat gamble with and see higher levels of volatility.
TrueLeaf Cannabis.
Okay, so transitioning over from HighTide to TrueLeaf Cannabis, TrueLeaf actually is a manufacturer of cannabis flower and some other consumable cannabis products, whereas like I said, HighTide is more of a retail distributor. So TrueLeaf, I am actually a shareholder and I'm very bullish on this company in particular. I'm going to say it is underrated, especially at the current price point. Now, yes, the company did do an offering at $50 a share. That's why we've seen the market price go down substantially. However, I think this is by far the most solid cannabis company to take advantage and ride through the growth of the cannabis industry over the next 5 to 10 years. Pretty much my entire cannabis holdings are in TrueLeaf. I do have some other Afria, but I'm not investing any more into that company right now. TrueLeaf is my number one play, and yeah, I think it is underrated. And if you're looking to open up a position in cannabis, TrueLeaf would be your best bet.
Next is TD Bank.
TD Bank is properly rated, honestly. It's a stock I've spoken about quite a bit on the channel in the past. Really solid bank stock in Canada, one of the top bank stocks arguably in the world, because in Canada we have a really strong banking system. And TD, I mean, it has a nice dividend yield. It has appreciated quite a bit over the past year because it dropped so substantially in March 2020. But yeah, for pretty much all portfolios, if you want exposure to the Canadian banking industry, you really can't go wrong with TD. And I would say that is properly rated right now.
Penny stocks.
Okay, so penny stocks from the perspective of retail investors, I'm going to say right now they are overrated, okay, as a blanket statement. Reason being, penny stocks they provide massive opportunity for substantial gains in typically a shorter time frame than larger companies. However, this also comes with the trade-off of a higher level of volatility and risk that you're bringing to your portfolio by adding penny stocks to the portfolio. So I am going to say it's overrated though, because especially over the past year, I've seen a lot of newer retail investors come into the market and have upwards of 50, 60, 70% even of their portfolio comprised of penny stocks. And I'm not against penny stocks whatsoever. I hold quite a few in my portfolios and I speak about them on the channel. However, you just need to take this with a grain of salt and see that you need to be able to only allocate a certain amount of your portfolio to smaller positions and penny stocks that will have that higher volatility, that you're maybe able to see have higher fluctuations in market value and not have this wipe out your portfolio entirely. I always recommend building out a really solid portfolio with exchange traded funds, as well as some blue chip stocks and quality dividend stocks, and then after having a smaller portion of your portfolio allocated to more gambling and higher risk, higher growth positions. So yeah, I'm going to say as a whole in the retail investing community, penny stocks probably overrated, but the idea of penny stocks themselves can be properly rated in terms of having a good portion of them in your portfolio for higher potential growth.
ARKG.
Okay, ARKG is ARK Invest's Genomic Revolution ETF, ticker symbol ARKG. I do hold some in my portfolio, and I think genomics as a whole, that industry is probably underrated in the longer term, 5 to 10 years. I can't say though that ARKG as an ETF itself though is underrated, just because there's been so much attention brought to ARK's funds over the past year. In no way is this an underrated fund, but I do think it is a quality fund to hold if you do want some exposure to this industry, as well as a maybe satellite ETF that you can add to your portfolio for some higher growth potential. Yeah, so I'm going to say it is properly rated.
NEXE Innovations.
All right, NEXE Innovations, ticker symbol NEXE. Once again, this is a stock that I had a lot of viewers requesting for today's video. So for those who aren't aware, this is a company that creates disposable, biodegradable coffee pods, essentially, to replace all the waste that Keurig pods, as well as other companies like Nespresso pods, are contributing to the world. So this is definitely a really innovative and I would say needed product that we need moving forward. Now, this is a company though that is pre-revenue. I spoke about them on the channel a couple months back and it did appreciate quite a bit, but has since sold off, I think more than 50%. Now, here's the thing, okay? Once again, this is a company though that is qualified as a penny stock. It is trading for a value, I'm pretty sure around $2 per share right now. And recently they did do an offering of around $35 million at a market value of $2 per share. So this is really typical of any company that is going to do an offering, especially a smaller company that needs capital to grow. It does suck as a shareholder to see share issuances because this is diluting shareholder value, and then they're also putting it at, say, $2 market value. That's what them as well as the underwriters are valuing their shares at. So this is the reason why market values are typically going to go and trend towards those share issuances. So that's why the price right now has gone down quite a bit. However, like I said in my initial video about this company, this is not the type of company that you're going to see massive growth, in my opinion, in the shorter term. This is a company that, once again, is disrupting an industry. This doesn't take 5 to 6 months to do. It's a multi-year process. And if you are wanting to invest in a penny stock like this, that is a smaller company, you need to be willing to accept higher levels of volatility. And I would say arguably holding on for multiple years. Again, this is a company that is pre-revenue, and they're really only starting to scale out production at the end of 2021. And with that production starting at the end of 2021, this is when revenues are really going to hit the income statement for this company. So yeah, I'm going to say right now it is properly rated just as a result of everything that I just mentioned.
Next is Facebook.
All right, Facebook, ticker symbol FB. I would say right now it is properly / slightly underrated. It is a stock that I spoke about on the channel a couple months back and since has appreciated quite a bit. I would still say though that it is a great position to hold for long-term growth in basically any portfolio. Facebook is one of the top digital advertising companies in the world, and over the next decade there is only going to be an increasing amount of ad spend towards social media marketing, and Facebook's also involved in multiple different innovative industries and products. So yeah, this is a great company overall, and I would put it at properly / slightly underrated for long-term growth.
Facebook Marketplace.
Facebook Marketplace is highly underrated. My girlfriend Sophie actually is like a whiz at it. She'll sell stuff that I think is complete garbage around the house, and somehow she's able to get a buyer for it. So I would say it's underrated, and yeah, there's lots of cool products on there, and I know some people make it a little business. So yeah, underrated.
Scotiabank.
All right, Scotiabank is one of these stocks where, yeah, it's one of the top 5 bank stocks in Canada, at least in terms of the largest. I used to hold shares of Bank of Nova Scotia. I sold them all off as a result of poor customer experience though with them. And overall, just I think there's other better options for Canadian bank stocks like TD Bank. I'm never going to be a customer of Bank of Nova Scotia again. They were basically like withholding about $12,000 from me for a mortgage port, and it was just a complete disaster. I dealt with so many different employees. So having such a bad experience, I was like, there's no way I'm investing in this company, pulled all my money out. But this doesn't necessarily mean that other people won't have a bad experience with TD or anything, but I personally just don't like Bank of Nova Scotia as a result, and I won't be an investor. So I'm going to put it at, well, it's not necessarily that it's overrated or anything, but just I wouldn't invest personally.
Good Natured Products.
All right, Good Natured Products, ticker symbol GDNP. This is a stock that I also wasn't very familiar with, but I had quite a few viewers asking me to feature it on the channel. So let's take a look at what this company does in case you're also not familiar. Essentially, they distribute and create bioplastics for use in packaging and durable product applications across North America. And this includes things like products for packaging, I should say, for baked goods, veggies, desk accessories, stackable legal desk, anyways, a bunch of bioplastics essentially. This is a product that I definitely think we do need as a society moving forward. We consume and produce way too much plastic that is not biodegradable, and that's going to be on the earth for hundreds of years moving forward. Now, from an actual financial perspective, though, the stock is trading right now for $1.20, so this is very much still a penny stock, and the company is trading for just over $200 million in market capitalization. As a result, do expect much higher levels of volatility moving forward, and if you are going to invest in a company like this, you do need to be able to stomach this volatility. Now, the stock has sold off quite a bit, though, from its peak at around, what was it, $1.82. So yeah, I would say right now though, price to sales, it does have pretty nice growth patterns over the past year in terms of top line. Price to sales 15.62 over the past trailing 12 months, which is actually pretty decent considering how quickly they're growing from a top line perspective. And I would say that, yeah, this is probably a stock that is properly rated. If you are though going to be holding it for most likely a couple of years down the line, don't expect massive growth in a short time frame.
And next is Coinbase.
All right, Coinbase, ticker symbol COIN. This is a company that just went public yesterday on Wednesday, and over the past 24 hours, that's pretty much all we're seeing in financial news. So I pulled up the ticker though, Coinbase Global, ticker symbol COIN. Right now it's trading for $334 as I'm filming this, and this is down substantially from the open price of, what was it, looks like it was around $410 a share. I'm gonna go ahead and say that it's probably an overrated stock right now. In terms of longer term adoption and growth of cryptocurrency being used in our society, yeah, I think it's still underrated because no one is actually really using cryptocurrency to pay for things on a day-to-day basis. So yeah, cryptocurrency as a whole probably underrated, and Coinbase being one of the best platforms and easiest platforms where you can buy and sell cryptocurrency, it's probably an underrated platform, but the stock itself, I'm going to say, is overrated right now. Market cap of $62 billion with a price to sales of over 48x. That is definitely a very expensive stock. I mean, they are growing quite nicely from an actual financial top line perspective, but yeah, I'm going to say it is properly rated as a result of the platform being underrated and the stock being overrated.
Ethereum.
All right, transitioning over from Coinbase, we're now speaking about Ethereum, which is the second largest cryptocurrency in terms of market capitalization. I think Ethereum, honestly, even though it has grown substantially over the past year, I think it is still underrated as being the second cryptocurrency. It's never going to reach Bitcoin's market cap. However, I think ETH actually has more use and utility from an actual blockchain perspective and what they offer as opposed to, say, Bitcoin. Yeah, I'm going to say it is underrated cryptocurrency, and I've actually been mining Ethereum for the past 4 years. Make sure to check out the video I'm overlaying right here to see what ended up happening over 4 years of mining Ethereum.
Palantir.
Okay, Palantir, ticker symbol PLTR. I actually spoke about this stock in the last overrated, underrated video, so make sure to check it out. Again, I left a link in the description, and the only reason I'm mentioning this again is because many people submitted Palantir, but I'm not going to go over it again in today's video. Make sure to check out the last one.
Going to the gym. Something you can't do anymore.
Yeah, literally you can't do it. It was open for like 10 days here in Yadno, and it's closed back down again as a result of lockdowns. Going to the gym is massively underrated, or just not even necessarily the gym, but just any type of physical exercise. It's something that I think you should do a lot on a recurring basis, at least 3-4 times a week. I try to do that when the gyms are open. For me, working out at home, even though Sophie's probably like, yeah, we can work out at home, it's just not the same, honestly, and that is an excuse. I'm well aware of that, but it's just not the same, right? You don't have the same amount of equipment, and basically I'm just doing a billion push-ups and sit-ups. It's not really nearly as fun, right? But yeah, going to the gym or just any physical exercise in general, massively underrated, and we need to do more of it, especially in times like right now. Physical exercise proven to be linked to increasing mental health as well. So as a whole, very important to do.
Ticker symbol HCLN.
All right, so HCLN is, yeah, the ticker symbol for an equally weighted renewable energy exchange trade fund that's offered here in Canada. I personally am a shareholder in it, and yes, since first buying in and talking about it on the channel, it has since only gone down in value. So I know quite a few viewers are quite frustrated about this, but here's the thing, and I've mentioned it again multiple times on the channel. Investing in an industry like renewable energy, like cannabis, like cybersecurity, any of these growing industries over time, it's not going to take 6 months or even 3 months. Some retail investors this is their time frame. No, this is going to take years of sticking to your guns and to your investments, dollar cost averaging in. If over time things change and your overall thesis about the industry changes, then fine, you can cut your losses or cut your wins and reinvest elsewhere. But for me, HCLN, I see this as a multi-year hold anyways. I don't plan on selling it, and so for this reason, seeing a lowered price point right now is pretty much irrelevant to me in the big picture. So I'm going to put it at underrated, actually massively underrated for longer term growth, and that goes for pretty much all renewable energy stocks and exchange traded funds that hold renewable stocks.
What are your thoughts on mortgage insurance on a property?
Okay, so mortgage insurance on a property, for those of you who aren't aware, you get mortgage insurance when you put a down payment of less than 20% on a property, okay? And so this is going to differ, but usually it's around 4% of the actual mortgage that you're getting, right? So let's say you bought a property for $300,000, you put 5% down, so you're putting $15K down. This means that your sub mortgage is going to be $285,000. Now, the mortgage insurance is going to be 4% of that amount. That is then added to the mortgage, and that is your total mortgage, right? And there's definitely different schools of thought about whether or not this is important or not. Or not important, but if you should go with mortgage insurance or not. I am definitely of the mindset that you absolutely should go with mortgage insurance if you're just starting out. There's multiple reasons why, biggest ones being opportunity cost and the time it's going to take you to save up to say 20% versus 5%, and then those years in between that you could be investing elsewhere, right? So if you're saving for $15,000, that takes a lot less time than saving up to 20%, which in that case would be about $60,000, right? That's a big difference right there. And in 2 years, a lot can happen in the market. That's reason number one. Reason number two, I have got mortgage insurance on a bunch of my properties, and it's split up over the 25-year amortization period anyways. So like, big deal. It's adding a little bit to your property, to your mortgage payments each month, I should say. And if it's on a rental property, your tenants are paying for it anyways. So you're able to access a lot more capital for a lot less money right now. Hopefully you bought an undervalued property that you can raise the rents, renovate, and raise the market value. And then from there, you're making a lot more money from that equity anyways. So yeah, to me, it's an absolute no-brainer. And I would say if you're able to do 5% or 10% down on one of your first properties and leverage up more money, you should definitely do it. So I'm going to say it is massively underrated.
House hacking.
House hacking is another thing that I think is massively underrated, especially for people who want to get into the real estate for the first time, but aren't willing to either fully buy a duplex, triplex, and have it fully as an investment, and then say they're renting on the side, or if you just want to go straight ahead and buy a house. This is very much a happy medium where you're able to get your foot in the door in real estate investing. You're able to leverage up your capital, but you can then have 1 or 2 tenants, depending on the size of your property, paying and deferring the cost of the property. So definitely very underrated. I did do it, however, and I found it somewhat difficult, but depending on the property you have, like from an actual financial numbers perspective, it was great and it worked perfectly. So yeah, I would say this is underrated, and if you're new to investing, definitely check it out. It's one of the quickest ways that you can get ahead, in my opinion.
The housing market right now.
All right, housing market right now is definitely overrated, okay? We're seeing properties they're selling within 24 hours, literally 15, 20, 30 visits, even up to 20 offers I've seen. I've actually put multiple bids on properties that are just getting blown out of the water in terms of counter bids that other investors or buyers essentially are putting. So yeah, it's definitely massively overrated. With that said though, during this period of time, I've still managed to acquire some really great properties, wedge deals that are going to create massive equity for me. It just takes a lot more time, a lot more patience, and basically just, waiting for the right deal that makes sense and not getting caught up in emotions and trying to get in a bidding war with someone else and getting to a price point where you're purchasing a property that has no spread for equity anymore. That's all I'm going to say right now. If you want to learn more about real estate investing, check out my other videos on the channel. I go a lot more in depth about my strategy, what I look for, how I analyze properties. But as a whole, absolutely, the housing market right now is overrated. Yeah.
Morningstar subscription.
All right, Morningstar subscription, for those of you who don't know, Morningstar is basically a platform where you can get a bunch of up-to-date information about stocks. They also give analyst ratings and overall ratings for companies, funds, etc. I've personally never used Morningstar. Actually I have, but not on a subscription base where I'm actually paying. I would say that it's probably... I can't go ahead and say it's overrated or underrated because I don't use it. I think if this works for you and it's able to provide you with the amount of research necessary for you to make strategic investments into companies, then great. It might be properly rated or underrated. There are other platforms though that I use, and even if you just have a free account with TD Bank, for example, web broker, you're going to get all that information and all of that research information, analyst ratings, all that. You can get it in TD, you can get it in Questrade. So I think there are other options that you don't necessarily need to pay a monthly subscription, but if Morningstar works for you, then great. All right, so that pretty much wraps it up for today. I really hope you enjoyed it. If I didn't get to your submission, not to worry, you can submit it next time. I'll probably do another one in around 2 weeks or so. So for that reason, make sure to follow me on Instagram. I'd love to know also what you thought about each one of the topics we covered. Let me know down in the description so we can talk about it. And if you want to see more content like this, as well as other more in-depth investment content, then make sure to subscribe to the channel, hit the bell button to be notified of new and upcoming content. And also, if you're a new investor, make sure to check out all the links to resources that I use and recommend for new to intermediate investors. So on that note, thanks a lot for watching today's video. I hope you have a great day, and I'll see you in the next one.